Thank you for watching the SMB Forex Daily Review. My name is Mark Principato. The goal of these reviews is to highlight techniques or other relevant information that may help traders gain a stronger understanding of how to operate as a short-term trader within the foreign exchange market. If you would like to know more about how to become a professional trader, please send me an email at mprincipato@smbcap.com. In today's segment, I want to point out how helpful pivot points can be when trying to determine intraday support and resistance levels. I use this tool in conjunction with other methods to help me figure out where I should be looking for buying and selling activity. Pivot points are generated from a simple formula: high plus low plus close divided by 3. The S1, R1, and so on are standard deviations of the value that were generated from the formula. Pivot points are helpful because they use the previous measuring period's volatility to project possible areas of supply and demand. Since we are using daily pivots, we are getting a forward-looking volatility estimate based on the previous day's range. Because the majority of market participants are looking at the same numbers, there is a tendency for buyers and/or sellers to act in these areas and present the short-term trader with potential opportunities. If we look at today's price action in the euro-dollar pair, it is easy to see that buyers appeared right above the 1.2395 daily pivot. As a scalper, I know to look for buying activity in this area. Why? Mainly because price just came off a new high. Does this mean price will stop right at the pivot value and go up? No. Price action is usually not that simple. The key is this: the pivot was in place ahead of time, so it allows me to anticipate buying behavior around this price area. So while the momentum is bearish going into the pivot, I'm thinking like a buyer. And that is as far as it goes. In order to take a position here, there is more analysis required. This is where price action analysis comes in. Price action analysis includes candlestick patterns, multi-time frame observations, and price pattern recognition. These are just some of the skills that we help our traders develop when they join our training program. The lesson to take away from this segment is this: pivot points serve as a point of reference to anticipate specific price behaviors or patterns. Once the evidence appears, actionable trading opportunities can emerge within the price area. The mistake you don't want to make is to expect price to react exactly at the pivot point, or fully expect a reversal. There are many instances when price will blow through the pivot like it's not even there. Pivot points, combined with other analytical methods and careful observation, offer excellent reference points for emerging trading opportunities. Just like any other technical indicator, used alone, pivot points are no better than random values on a chart. That's all for now. I hope you found this segment helpful. If you have any questions, please send me an email at mprincipato@smbcap.com. Speak to you soon.